Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 4:30 in New York. It is Monday, December 19th, 2016, and this is the Daily Report for Gold and Silver. Although the entire complex of precious metals, except for gold, is trading lower on the day, we do have gold with a modest bounce, currently trading up about $3.50 with very, very little volume and light liquidity in the market itself. We do have an increased volatility, though, in some of the markets. First, let's take a look at gold, trading roughly at 1141, putting it up about 350 on the day. The high today is 1144.40 with a low of 1135.50. So as you can see, we do absolutely have a contracted range, but we are having safe haven assets react as a Russian ambassador was murdered or shot this evening over in Turkey. Silver, however, is not trading in any way like a safe haven asset. It is trading off tremendously, off almost a full 1.25%, trading off about 19-20 cents, just above $16 at 16.02. The low 15.95 and the high 16.26 on the day. So traders, I do want to start today's show off by looking at a standard candlestick chart of gold. We've had 2 days where we have seen modest gains in the market, both on Friday as well as today. Today closing up about $3.20. You can see that with this small-bodied green candle. Now, this really as a reaction to an event that happened over in Turkey where a Russian ambassador was killed. And the interesting thing that I see in the markets when I look at today's activity is the fact that we certainly have gold acting as a safe haven asset. And oddly, we have none of the other precious metals reacting in similar manner. And what I mean by that, or the easiest way to express that, I should say, is to put up the Kitco Gold Index. Let me bring that in right now. And when we look at the Kitco Gold Index, you'll see something quite interesting. Now, first of all, we did have a stronger dollar. The dollar, treasuries, and gold were higher, all of them as a safe haven play. You can see how that really came out, in fact, where we had the gold trading about $8.50 higher, or a net gain of about 75%, 0.75%. Now, we had the US dollar trading stronger today, gaining about a 1/3% in terms of the market move. And so that had to account for a $4 decline in the price of gold, which is what gave us our net change in gold of up about 0.4%, or a total of about $4.50. This, of course, being cash, not futures. Now, what I find interesting is when we look at silver and we look at platinum and we look at palladium, all of those markets traded pretty dynamically under pressure. All of them posted lower closes on the day. None of these three precious metals were able to overcome the strength of the US dollar, but we did see that safe haven play enter in gold and have gold effectively trading about $3 to $4 higher when we look at gold pricing, which really beckons the following question. Has gold found any kind of a long-term support? Will we see gold prices move higher from this particular price point? My initial take on that is to answer no. I don't think we've witnessed a long-term bottom just yet in gold. I still believe that gold has the potential to trade effectively a little bit lower, as low as maybe 1110 to 1115. That, of course, is based upon a 78% retracement level. It does fall within the confines of a 75% retracement, though, in terms of where the low came in. And as you can see, I have just added 75 as one of our numbers on our Fib retracement. That comes in at around 1123, and that does match up with the lows that we saw last week. However, what I'm looking at is the fact that we have a somewhat of a price void. It's not a true price void because we did have a wick or a low come into the market. But when we look at the relationship between the open and close, they all fall above this particular point and opens and closes below this particular point. And so for that reason, I believe that we could see the market come in on a technical basis and fill this particular area before tracking lower. My sense is that all things being equal, we should continue to see some pressure on the precious metals markets, given that we have this tremendously strong risk-on environment. I believe that that could easily continue up through the end of the year. And I also think that come Inauguration Day and the first weeks into the new Trump presidency, we will see some dramatic moves in gold. Those dramatic moves could be lower if, in fact, he pulls off what he says that he will. And in the other end of the spectrum, if in fact he is unable to meet his promises, or if his style of leadership causes him to implode, if he gets in skirmishes, as we're already seeing come out with these recent tweets that he has put on his Twitter account to China, we could see really equities come under tremendous pressure, and we could see gold, safe haven assets really take off, and we could witness a tremendous rally in the market. And that is in essence what I believe will be the way that next year unfolds. Because if we look at this just on a straight technical basis, we consider the following. From the beginning of this year, the unique component to trading this year was we had a high that was far above the high that we saw the prior year, meaning 2015, and from 2012 to 2015, we saw this market dramatically decline. So we absolutely, let's go ahead and kind of move this in a little bit. So we absolutely saw this market under incredible pressure as it traded lower for the better part of 2011, 2012, 2013, up to 2014. And it wasn't until really 2016, this current year, that we actually had, these are our current highs. So we had all these series of lower highs that came in year after year, year after year, that gave us technical confirmation, technical evidence that we were in an absolutely bear market. Although we didn't really need that to tell us the fact. But technically speaking, we had these series of lower highs that came in. We had series of lower lows that came in. That all really changed this year, because what we saw this year was a high that was above these former highs here of 2015, actually high above the high that came in at the end of 2014, and it matched the highest high that was reached in 2014. So we got rid of a couple of lower highs, took them out, so to speak, and that to me really is something that is important when we look at this market on a technical basis, because then our model does make sense, in which we are postulating the following: that what we did is we concluded a major A here. We've gone into our major B. Our major B is going to be composed of an A, a B, and then our final C. And that C will take us, if this model holds, above this former top at 1380. Now, when we look at the current market scenario and the current geopolitical environment, what would cause this market to abruptly turn around and go and get fueled into a tremendous rally? Well, we know that we are in uncharted territory, and if we go into any kind of a real rough patch within that uncharted territory, we could really see gold take off. And traders, as much as I don't want that to happen, I believe that that is a decent probability in terms of occurrence. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.